Good morning, everyone. I want to first and foremost thank each and every one of you for taking time out to watch my content, comment, and like on almost every videos, every content I've produced out there. I want to appreciate all of you. It's been good, it's been nice. And of course, the more you watch, the more you view, the more you learn, and the more you comment, the more you like, the more I'm fired. I'm fired on, I'm inspired to do more for you, to create more content. I've promised that everything that I use, everything that I apply that work so brilliantly in this market, I'm going to let out all the secrets to you guys. As long as you keep liking, you keep watching, you keep sharing, I'm going to give them all to you. All right. So far so good. I've gotten a bunch of feedback concerning how good people have found some of these contents to be. Uh, it's uh, it's just amazing, how people have described the video uh, to be. Well, it is not my making. I thank God for everything, and I also thank God for those that have worked on some of these concepts before me. And I also appreciate my creator for giving me insights on some of the theories I've made for myself that have worked for me over time. I also thank God for that. But I just want to encourage you to keep learning, keep watching, watch it again and again and again until it becomes very clear to you. Remember, I've also opened my door wide to whoever does not understand anything here to contact me. My contact details are in the description of each of my videos. I even put my email there where you can contact me via my email, via my Twitter handle, via my Telegram, and so on and so forth. You can contact me, discuss with me whatever you want. And even if you want a mentorship, you can contact me. I will discuss how you can go about it with you. Some of these things are not difficult, but sometimes we tend to make them too difficult, but they are not difficult. But you also see that the way I structure my content, I structure it in such a way that we make it very easy for, new traders to understand. I started creating content by, discussing what is Forex. Okay, from there, I move straight to those things that drive the Forex market, all right? The fundamentals, okay? The political happening in different countries and how it affects the Forex market. I went ahead to discuss what is called inter-market relationship, okay? The bond market, the capital market, the Forex market, the commodity market, the crypto markets. I discuss all these in details and how each of these markets relate with others, okay, and how all of them affect the currency market, okay. I discuss also type of currency pairs, how you should select them, risk management. I gave you all the background of this in my Forex Foundation course, okay. From there, when you are done with my Forex Foundation course, I had expected you to move to education courses under the playlist, education under playlist, okay? There are a lot of videos, like 25 to 30 videos under education. There is no way you watch this video under education that you'll not be a complete trader, all right? Because there you have Elliott wave theories, you have a lot of courses on divergence, a lot of courses on a lot, guys. So from there, I'm now producing content that had to, that had to talk on entry, because no matter how sound you are in technical analysis, if you don't, incorporate a trading system that help you to spot the exact zone where you should enter the market, you're going to be in trouble most of the time. And that is what we are trying, to prevent, guys. That's why all my content in recent time has been centered on entry. So today is not going to be different. I'm going to discuss with you more on entry today, and I believe this will save many people. All right. So there are many ways you spot your entry. You have seen that clearly, defined in my 4 entry rules that was recently modified, by introducing the 5th rule, that in that 5th rule, you must see the left hand side, how strong was the impulse on the left hand side. For instance, you see this impulse here, you see this move to the downside here. If you look at the pressure to the downside and pressure to the upside, you will see that the pressure to the upside is a fine one. It's a better one than the pressure to the downside. So this tells you that the momentum has shifted to the upside and no more to the downside. So what I want to discuss with you today is that for you to consider a trade, for you to consider an impulse that you will be looking for the 50 to 61.8 of that impulse, there must be a strong push. It is not every impulse I want to consider. All right. This might be an impulse. All right. Even though it look corrective, there are scenarios where it will look like an impulse if it is a diagonal. Okay, 1, 2, 3, 4, and 5. Okay, this is a diagonal. So it can also be an impulse. But the kind of impulse I want to trade, that I want to be looking for the correction, are the impulsive move that are fine one. I call it a fine impulse. Okay, a beautiful impulse. An impulse that look like a darling. An impulse that look like a baby. That's the kind of impulse I'm looking for. I'm not looking for an impulse that have pimples on a rough face. I don't need a rough face impulse. I don't need a pimples impulse. I need a fine impulse, guys, to the upside. So if I have done my, top-down analysis and I have seen that at this level, the sell move should end. So if I now see a move to the upside that look like this darling, can you see? Beautiful. Let me zoom in so that you can see that this is a darling impulse. Can you see on this 1 hour time frame? Do you see this impulse? This is a fine impulse to the upside. Fine impulse to the upside. Now the question is this: where you are supposed to take a fib of this impulse and target 50 to 61.8 or 78% retracement if it's a zigzag. Is that correct? Yes, it's correct. But now I want to tell you something today. Where are you supposed to start the fib? Where is the impulse starting from? Is it this level or this level? I'm going to show you the secret right now. Where the impulse starts from is this level, not here. Why is it this level, guys? Look at the move to the downside. This is where your knowledge of market structure will come to play. Resistance, support, resistance, support, resistance, support. This resistance that is here, does it break this level? If it breaks this level to the upside here, before it comes down here, then you start this impulsive leg, this level. But for the fact that this was the last resistance, it make a move down, and this resistance here does not break this level, then in that case, this was the last resistance that formed before this leg. You are going to take your impulsive move from this level, boom, this level to this level, boom. Can you see? Can you see now? We are going to take it from this level. Let me take it again because this is very, very important, guys. This is very, very, very important. Just get it. Get it once and for all. And if you get it now, you are not going to have issue, looking at it again. Watch. We want this fine impulse to come down to 50 to 61.8, which is this level. But you must measure this impulsive leg first. Where are you supposed to measure it? Is it supposed to be this level or this level? That's what I'm explaining to you. In this scenario, is this level. You are measuring your impulse from this level. Why this level? Why not this level? The reason why it must be this level is that this was the last resistance. It came down, it made this resistance, it did not break it, it came down, you now have this one that breaks it. So assuming that this move here broke this level to the upside and came down, it then means that if we have to look at it on the basis of market structure and impulse, it then means that this is wave one, because it has broken the last resistance here. So this has become wave one, this is wave two, and then you are moving with wave three. I'm not saying that is the labeling right now, but I'm just telling you, you know, where the idea came from, that if this move here, if this push here has not broken this previous resistance, then you are going to take this move as part of this strong one to the upside. But if it has broken this previous, this move here has broken this previous resistance, then you are going to start measuring your impulse from this level, from here to this place. And in that case, your 50 to 61.8 will be where? Will be here. Do you see now? But because of the fact that the previous resistance on the way to the downside, let me clear some of this. The previous resistance, which is here on the way to the downside, if you have to take it this way, watch it. This correction, this correction, this. Look at this move here. Did it break this top? No. So because it did not break this top, then the move to the upside started at this level. So if we are going to take a fib right now of this move, is going to be from here, impulse. Boom. Where is 50 to 61.8? In this case, this is a zigzag corrective structure in the form of WXY. So we're expecting 78, 50, 61.8 to 78. At this level, we need this move to the upside. Do you understand now? So it's as simple as that. So, but now, if, for instance, when you have this, you have this move, impulse, correction, impulse, you now have this move that break this resistance. Then any correction you have before you have this impulse, your impulse here measurement will now be from here to this level, and this corrective structure will not be big, will not be as big as you are seeing it, and will not be as deep as you are seeing it. Do you understand now? So the bottom now here is that the bottom line is that you must see a fine impulse before you should be looking for retracement to 60 to 61.8. Let's check another, another situation where you spot a fine impulse, guys. Let me see. Euro GBP is another scenario where you spot a very fine impulse. Can you see? This is a darling impulse. This impulse right now, guys, does not have pimples. You see? Does it have? No. This is what is called a fine impulse. What makes me to think this is a fine impulse? Can you see that on the impulsive leg to the downside, you really see any buy candle there? Just like this is a fine impulse. A fine impulse, guys. The same way this is a fine impulse. But if you take this pair to daily time frame, you will see that you see a candlestick pattern that really matter. You see it here? Candlestick pattern that matter. So I'm looking for a deep pullback in zigzag for me to take this trade to the downside. But for now, it is not set. But I'm just showing you that this is a fine impulse. Take it to 1 hour time frame, guys. 1 hour time frame. You are going to see that you have a fine impulse there. Can you see? Fine impulse. This is the type of impulse I want you to be looking for. 50 to 61.8 or 78. All right. So now, if you take a fib of this, that is the first rule of an impulse. All right, to the downside. That's the first rule. Look for an impulse. Number 2, look for a correction. There's already a correction. And this correction we are seeing right here is going to form a zigzag corrective structure. What makes it to be a zigzag, guys? You see a corrective structure in the middle, you see an impulse, you see a correction, you must see an impulse. Okay, you must see an impulse. All right, I'm waiting at this level. You can see I've set an alert from this level to this level. I've set alert. If market hit these two levels now, I'm going to take, my stand and take a sell move to the downside. Is that okay now, guys? So in this setup now, you have seen a fine impulse. All right, you have seen correction to this level. And what makes me to think that the market will come to this level? Whenever you see an impulse, you must consider an equal leg between wave A and wave C. This is wave A, this is wave B, and this is wave C. All right. Why am I projecting that level? Take a trend-based fib extension, guys. Drop it here, drop it here, drop it to the end of correction, where it's 100 to 123 fib retracement, guys. This level. Can you see? This is a juicy level, guys. It's a juicy level. I'm expecting a reaction to the downside. Apart from definition of the nature of corrective structure that we have just done, you also remember that the fib level in a zigzag corrective structure will usually hit 78% retracement or equal leg between wave A and wave C. Of course, you know that, the fourth rule is that when you look left, you must see a supply zone. Yes, we have a powerful supply zone right here at this level. So this makes this is going to make this sell opportunity to the downside a very superb one. All right. So I want you to take note of that. So this is another trade setup that I'm having for you. Let me put this, guys. Let me put this setup here. Boom. Looking forward to having this. Okay, I'm just doing this tentatively. When the market gets to that place, you know what to do. All right, you now make necessary adjustment. So the pairs I'm looking forward to this week, I want it to go as far as getting to this level. Okay, getting to this level, boom, right here. From here, we can assess the situation and see what I can do, what we can do. All right, if there's any adjustment, expect it to be 1:10 risk to reward. It's going to be a good trade to the downside, guys. That is trade number 2. Remember, trade number 1 is the GBP card. Where is it? GBP card. Okay, that's trade number 1. Okay, all right. It's a fine impulse. All right, the first rule is that you must see an impulse. Okay, this is an impulse, this level to this level, but because this impulse is forming a zigzag corrective structure, which is WXY, impulse, correction, impulse. Okay, we're expecting it to hit 50 to 61.8, guys. Let there be a reaction here, guys. We have a move, correction, push to the upside. So right here, real quick, guys, I expect a reaction anywhere at this level with a little stop loss and a move to the upside to break the previous top. This is going to be a fine trade to the upside, guys. Take note of this. Take note of this. It's going to be a fine move, guys, because we have a darling impulse that is very fine and beautiful. Can you see? Can you compare? This is also an impulsive move to the downside, but can you compare this to this? No, this is sick. When this was forming, it was forming with malaria, diarrhea, typhoid, malaria, and so on and so forth. This one had no blemish. The system was perfect. The system was perfect. Absolute buyers, no sellers at all. That's the kind of impulse we want to see. It retraces to 50 to 61.8 or 78 if it's an zigzag for us to buy or sell. But this one is sick. We don't want to, even though the pair might play out, but that is not what we are looking for. We are looking for the best setup in the market. Even though they are not up to 3 or 4 in a week, we are okay. What is important is for us to have a profitable week. Okay, we want to have a profitable week, we want to have a profitable month. That's all. Okay, so we need to be selective in the choice of our trade. Can I spot another one? I've spotted the Euro GBP. I've spotted GBP card. You can also take a look about on Euro GBP, but I'm not going to, select this Euro GBP Euro card for one reason. I'm going to tell you right now, real quick, guys. You also see that this is a fine impulse to the upside. This is a fine impulse to the upside. Okay, and then you are expecting what? You are expecting a correction. This is a fair value, guys. You are expecting it to break down to demand level. Okay, we're expecting it to break down to demand level. Let me explain very well what I mean. This is a fair value. This is a range where the retail traders operate. Okay, this is a range where retail traders operate. They buy and sell within this level. We don't do that, guys. We don't do that. We don't do that. We don't do that. And I know all my students, all my subscribers will have known that for now. We don't buy. We don't buy or sell within this area, guys. That is where people who has no knowledge of this market operate. Okay, what we want is a push. If this market should make a mistake to push to the upside, we are going to catch. We're going to catch our entry at supply. This scenario, where's our supply, guys? Our supply becomes this area. Okay, we're going to catch our entry at exactly 1.3800, and from there we make a move to the downside. That is the idea behind the application of fair value in the market. But in this scenario, since we are expecting a GBP card to make a move to the upside, and you can see the structural presentation we are seeing before us is a bit different from what you have in a GBP card. Okay, but in this scenario, what you'll be expecting here is that this market that is consolidating here should break down to this level. Okay, break down to this level. This must have made enough retracement, and we have a push to the upside. But guys, do you know why I don't focus my attention on the buy of Euro card? And I also prefer GBP card instead. The reason is simple, guys. It's simple. Just follow me. Do you see that we're expecting a breakdown of Euro GBP? Okay, just like I've shown you the other time, where's Euro GBP, guys? Yeah. All right, we're expecting Euro GBP to get to this level and break down to the downside. So if Euro GBP is to break down to the downside, guys, it then means that we're expecting Euro to be very weak and GBP to be very strong. So if Euro is expected to be weak and GBP is expected to be stronger, the implication is that if you have buy setup on GBP card and Euro card, all right, now Euro GBP is expected to go down, so Euro will go down. It then means that even if Euro card is going to buy, the buying will be a little bit sluggish. All right, it's going to be very slow, guys. The buy on Euro card is going to be slower than that of a GBP card. When GBP card is making a boom, Euro card is making a sluggish move to the upside. Can you see? Just because in this circumstance, Euro is very weak and then GBP is stronger to the upside. Do you see how I select my trades? So I'm seeing a buy setup on Euro GBP and I'm seeing a buy setup on GBP. A buy setup on Euro card and a buy setup on GBP card. But I'm favoring a move to the upside on GBP card. Why? Because Euro GBP is projected to go down. And as long as it's going down, Euro is going to be weaker in coming sessions and GBP is going to be stronger. So I favor GBP card to the upside. Cancel Euro card. You can even see by yourself, okay? GBP card has made its correction almost to the structural area. Look at where Euro card is right now, because at the moment Euro GBP is going up to go and complete the structure. So right now Euro is stronger than GBP. That is why it's sluggish to go down, because of the strength of Euro. I think you can see how I'm relating the pair. I'm relating them each to one. I'm relating them together for you to get the best setup for yourself. Is that okay now? So that's it on Euro card. Then I'm also looking at possible opportunity on GBP CHF, guys. From the analysis of Euro Euro GBP that I told you guys, that this pair is expected to make a move to the downside after hitting this structural level, guys. So if this move to the downside starts here, it is also creating a signal for GBP CHF to make a move to the upside. Okay, as you can see that, after this impulsive leg, three-wave structure to the downside, what it's doing here is creating what is called an ending structure. Okay, when you have a move to the downside, impulsive move for that matter, and you are having a structure this way, break the low, cannot take the top, 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 break the low. This is what is called an ending structure. An ending structure. This is a pattern that shows that this market is eventually going to make a powerful move to the upside. Okay, it's an ending structure. What are you going to see for you to go in to the market? Each time is breaking the low, mark the resistance. Now that's broken this low. Right now we mark the resistance. So what do we want, guys? We want a move to the upside that breaks the previous resistance. Where's that move? See the move. Broken this previous resistance to the upside. And as soon as this move happens, guys, this has created what is called a fine impulse. It must create a fine impulse. So what do you do to the fine impulse? You take correction, look for corrective structure, and then look for this fine impulse to come to 50 to 61.8. All right. After that, look for a buy opportunity to the upside. This is how to trade an ending structure, guys. Do not try to catch it from the bottom if you are not a super professional. But if you are professional enough and you know what you are doing, there's a way we trade it to catch it from the downside. But I'm not going to teach you that now. I'm going to teach you how to do it the proper way. All right. When you begin to advance in knowledge, then you begin to innovate on your own on the best way you can take your trade, and you don't lose in the process. Okay, that's how you are going to approach this kind of structure. And yeah, can you see what I've drawn here? You have seen the exact structure here. Okay, I've seen the exact structure here. You see the move, break this low. 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 And then when you have an ending structure, there is a confirmation that this ending structure is going to end in a downside, in an upside, if you have it this way. Okay, you also have the one that is a bullish structure, but this one is a bearish structure. You are going to see what is called a divergence. You are going to see what is called a divergence. Do you see that as this price is making a lower low, this low is lower than this 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 low. As it's making a lower low, what's happening right here at the indicator? This low, the next low is higher, the next low is higher, the next low is higher, the next low is higher. It's making a higher high, higher low, higher low, higher low, higher low, higher low. Whereas here is making a lower low, lower low, lower low, lower low. This is what is called divergence. What do I call it, guys? Divergence. So an ending structure that is accompanied by a divergence gives us an indication of a sure move to the upside if it is an ending structure at the end of a downtrend. If you see an ending structure at the end of a downtrend, as you are seeing, as being represented by this GBP CHF, you see a big push to the downside, an ending structure here, a divergence here. Just know that this move to the upside is imminent. But as soon as you see a strong push to the upside that breaks the previous resistance, all you just need to do, guys, is look for a corrective structure back to 50 or 61.8 or 78% retracement if it's a zigzag and you have a move to the upside. But experience and practice and backtesting shows me that when you have an ending structure, it does not normally form a zigzag, or if it forms a zigzag, it doesn't come to 78% retracement. It doesn't form a deep retracement because it does not like to come back to the, to the territory of the what of the ending structure. It does not like to come to the territory of the ending structure. And by the time it's coming back with 78, it will have come to the territory of the ending structure. So in that scenario, it just like to come make a fine pullback or a fine retracement that just come maybe 50 or 61.8. It does not come deep into the territory of the ending structure before it make a move to the upside. Is that okay now? So we are looking for a buy opportunity, a fine buy opportunity for what? For what do you call it? GBP-CHF. And let me tell you something, guys. This divergence that shows that this market is to make a move to the upside might just be a divergence that shows the completion of corrective structure. Okay, because remember that in the process of making a move to the downside, you have a fine push. This is the fine push I've been telling you guys, fine push. So you may just succeed in having a three-wave structure here to just complete this structure, get to this supply area. Remember, if you take a fib of this leg to the downside, okay, this is your orthodox bottom and not here. This is where it's top. All these are part of the correction. So you can see that, all right, you can see that here you have 50 to 61.8. Okay, you have to the left, you have the supply area here. Then you can have a continuation move to the downside here, possible. So this divergence here may just be for you to make a move to the upside to complete the corrective structure. Is that okay now, guys? Okay, because if you look at this structure on a higher time frame, we should just make this corrective structure and likely push down to the downside. Is that okay now? Okay, let's look at gold, guys. Gold. We also have a setup on gold, though not too convincing, but when you look at the structure in an entirety, we want this market to make this structure impulse, correction, continuation. Probably break this top. I want you to break this top, come to this level. Okay, but 1,900 will just be enough for us to make decision. Okay, but right now it has made a three-wave structure here, 1, 2, and 3. Then you have W, X, and Y. Then you have continuation move. Maybe because it's slow and sluggish, you can just have 1, 2, 3, W, 1, 2, 3, X, 1, 2, 3, Y. Okay, so the Y leg may create a WXY structure for you. That's why I'm waiting patiently, guys, to catch this move at this level at around 1810, guys. 1810. I want this market to come to 1810 so that we start, the move, the Y move to the upside will continue at this level. I don't expect this move to the downside to break this level, guys, because I expect that this is the beginning of Y structure. All right, this is the beginning of Y structure to the upside. This impulsive leg to the downside has completed the ABC move here. This is A, this is B, this is just an impulse, C, and that's, that complete the middle structure. So this is the Y structure. This is W here. This is X here, three-wave down. Then we want three-wave up. Okay, in the size of this wave of W, we want it here. But since it's slow and sluggish from the beginning, and in fact, forming three-wave up, three-wave down, I expect another three-wave up correction or an impulsive move to the upside, correction here, and then we have a further push to the upside to form a W, X, and Y structure. If you don't understand how I'm doing this, this is not a session where I have to start training you on what is called WXY or what is called an ABC. You've got to go back to my course on how to treat corrective structure, how to recognize a flat, how to recognize a WXY structure, and how to relate this structure together to make sense out of it. You have to go back to those videos and watch it. All right. So that is another setup I have for you here. Let's also see Let's also see AUD, no, NZD JPY. NZD JPY, I think I have set up on NZD JPY. Can we check it? Where is it? Can we see it? NZD JPY, yeah, NZD JPY. Okay, so we have set up on it. Also see that, aha. So now, if you look at it, even though this is a fine impulse, but do you notice that why we see that as a fine impulse? You also see that this is a three-wave structure to the downside. Because the reason why I'm teaching you all these things and the need for you to be very careful when you see all these things is that if this is a fine pressure, set pressure to the downside, why is it that it has not pushed to the downside and you now see the reappearance of a buyer, of the buyers, putting it to the upside again? So for the fact that we are seeing reappearance of a buyer at this level shows me that the right pressure to the downside has not showed up in the market. Can I repeat myself? Oh yes, you are seeing a fine sell pressure here, but it has not gone anywhere compared to this move to the upside, and you are seeing buyers suddenly resurfacing. And after that, you now see a fine push down. So if that is the case, I will now take this move as a three-wave structure. So this is not it can be an impulse in some sense, but in this scenario, I'm taking it as a correction of this move because I'm seeing a three-wave structure. I don't expect that buyers will appear after this little move to the downside. So in this scenario now, I would not like to take a fib of this impulsive leg to the downside. I would not like to do that. I would rather see this three-wave move to the downside as a correction to this push up. Therefore, I will expect this one to also sluggishly go up, and at a time, maybe after breaking this top, make a fine push to the downside. Okay, after making this fine push to the downside, what will I now do? This is now the impulse I would like to take the fib to the downside. So in this fine impulse, if it is as beautiful as this one, then I'll be looking for corrective structure to where? To 50 or 61.8. If it's an expanding flat or a zigzag corrective structure, I'll be expecting a 78% retracement. And then from here, I'll be looking for sell opportunity to the downside. Can you see? And if on its way to the downside, it's also forming a three-wave structure again, we have to reassess the structure. That's how to go about it. But for now, this is the best how best I can explain the structure that is before us on what? On NZD JPY. Right now in my signal group, we are buying. Okay, no. I think it's only me that's buying this. We are buying GBP JPY, and we're also buying Euro JPY. But I think it's only me that's buying this NZD JPY because I don't want to give too many trades to the public. Only just one or two is okay. Once that is won, then we go for another battle. You know, when we win another one or two, we go for the next one. So you know, and that's how we do it. We don't have to rush ourselves. This is just Tuesday. We still have Wednesday, Thursday, Friday to trade. So no need to rush. Okay, guys. So these are the setups I have for you for the weeks. These are the things I'm focusing on. Of course, you know, any setup I'm focusing on, that is what I will, that's what I will show you. This is what I'm focusing on. Don't forget to also work on DXY. This DXY is expected to make a move to the upside. Right now, the volume in the market is so slow and sluggish. You see how I circle it, see how it's behaving. So we need a powerful volume to the upside to make this breakup. And as soon as this breakup is happening, there's going to be increased volatility across board in the market. And this volatility is going to make your setup to play out if it is correctly done. Is that okay? Maybe when this breakup will happen, that's when you're going to see GBP card complete its corrective structure. That's when you see GBP card complete its corrective structure and also make a move to the upside. Do you understand? Okay, that's when you see Euro GBP complete its structure to the upside, and from here Can you see how I time my trade? I'm not going to take this sell until I see DXY make a move to the upside. When it make a move to the upside, this one will flip to the downside. And when this one is flipping to the downside, that's when you're going to see GBP/CHF flip to the upside. Can you see? So when DXY is preparing itself, all other structures are also preparing themselves for movement. So the only thing is that the trigger for them to make a move either to the downside or to the upside based on the existing setup is based on what DXY is doing. So if volume come to the market, you will know from DXY. Why is it so? Why is DXY so popular? Why is DXY so important, guys? Why? Why is it so important? It's very simple, guys. It is important because all major, economies in the world, they use USD as what? As a reserve currency. It is a reserve currency of about 80% of the countries, of the economies of this world. And apart from that, all major commodities, not all major commodities, all commodities are what? Are priced in USD. You want to buy crude oil in international market, it's on USD. You want to buy gold in international market, USD. You want to buy crypto in international market, USD. You want to buy cocoa and coffee in international market, USD. So these are the reasons why USD is so important. And then if there's volume in the market, people are buying much of cocoa, much of coffee, much of gold, much of crude oil, and all those things, is going to, the level of transaction that you notice in buying this commodity is going to reflect in the value of USD. Because there is no way there is a large demand for cocoa, coffee, and gold, that there will not be large demand on what? On USD, because it is USD that they will use to buy this. So that is why you see that when there is volume in the market, it's going to reflect on DXY. And once DXY is making a move, you will see that all other setup will begin to behave the right way in the market. This is how I do my trading, guys. And I want to believe that you are going to take a clue from what I have taught you today. Make sure you look at a fine impulse. I look at a fine impulse. There are many setups in the market, but I only take few that are convincing. And how do I know that a particular setup is convincing? If I see a fine impulse. It is only a fine impulse that will differentiate a setup from the other. And that fine impulse is not only just fine for fine sake. It is fine, pretty, and beautiful because there was a strong push. Okay, just like you see in GBP/CHF right here, guys. Let me show you. There was a strong push. There was an absolutely strong push to the downside. This is what I call a fine impulse. Do you understand? This is a sick move. All these are sick move. Can you see that this is also an impulsive move to the downside, but it's a sick one. It's a sick one. I don't want to look for retracement of this kind of push to the downside. I don't want to look at it, but I want to look at retracement of this impulse to the downside because it's a fine one. There was no element of buy along the line. It was sell. Do you understand? Look at something like this, guys. Look at a strong push. This is a strong push to the downside. Can you see it? It's not sick. And you see that if you take a fib of that level, you see that it respects your fib level. Can you see? Brilliantly, 50 to 61.8 wheeler to the downside. That is what we are talking about, guys. Not just looking at the chart and just trading anyhow. Just trade anyhow. You know, you don't make money when you do that. You know, the essence of this channel is to right the wrong, is to say enough is enough. You have been losing here and there every day. You don't know. It's because you lack knowledge. There is nobody in the market that is working against you. Some people will say it is their broker that is working against them. It's a lie. Your broker is not working against you. The way you are working your own to make your little change in the market, that is the same way your broker is also doing their own. Let me tell you, your broker even pray for you to remain in the market forever. So that as you continue to trade, guys, they continue to get their commission from you. That is their interest. So if you now lose out and you are not trading again, how will they get their commission? And you think that your loss is a gain to the broker? You are a joker. Your loss is not a gain to the broker, because as you were selling and you made a loss, your stop loss has been used as liquidity for those that are buying. It's as simple as that. So they are the one that took your profit, not your broker. So stop saying your broker stop hunted you. Forget that. I see a super professional trader talking of stop hunt. I say, what do you mean by stop hunt? Do you know what you are saying at all? Who is stop hunting you? Who is stop hunting you? You place your stop loss where you are not supposed to place it. And your stop loss for a buy trade, your stop loss under is used as liquidity for the people who are selling. And then what are you saying? So guys, enough is enough. I want you to take a clue from all these secrets I've showed you. By the special grace of God, this is the only setup I'm going to give you this week. This is the only thing I'm looking forward to. By next week, I will also give you a setup. I promise you that I will always give you setup for the week. And every Monday or Tuesday, it will be ready. I will do it. That's when market is setting up. Gradually, I will do my setup for the week so that you can see what to watch. And you want to take advantage of some of them, take advantage of some of them. All right, that's enough, guys. If you have not subscribed to the channel, please do well by subscribing to it. And I also encourage those that always comment on how they see the video. Please continue to comment. And while you are commenting, don't forget to like the video. All right, so see you next time, guys. Bye-bye.